Warren Buffett just made a $1 billion move into a healthcare giant. And of course, you know, we are talking about the beaten down UnitedHealth Group, ticker symbol UNH. Of course, the market went wild, but the stock still dropped almost 10% in the after hours. And reasons behind this trade tell us a lot about Warren Buffett's plan for 2025. So let's break them down right here at Wealth Town, where we build and protect wealth with me, Norbert PM. Now, in the latest Berkshire Hathaway's 13F filing for the Q1, we saw that Berkshire Hathaway bought 5.04 million shares of United, which pretty much drove down the shares of UnitedHealth Group. These are the shares outstanding in the last, or in all time even. Now, the position was worth $1.6 billion at the end of Q2. Now, that's about a 0.55% of the company that he just bought. So not that big of a move, but big enough for UnitedHealth shares to jump after that move from its lows from 271 up here to 300, and then it dropped back down again. Now, this was just the buying. We didn't know back then that this happened, and then the shares drop once more. Now, this is where the news came out. So basically this week, and now we can see the UnitedHealth shares, not Berkshire Hathaway's, UnitedHealth shares are finally above the 20-day moving average. So this news is out. Let's see what will happen next. And remember that the F13 filing only shows positions at the end of the quarter, basically. So they may have bought even more. This is why the trend is going upwards. Now, why UNH was on sale? First of all, let's clarify that. There were a couple of reasons. First of all, surging medical costs at UNH, which was eating into their margins. There was a major cyber attack, which was the Change Healthcare cyber attack. Well, that was basically the biggest breach of healthcare data in the US history. And of course, the big one, which was the Department of Justice, the DOJ, was or is still investigating their Medicare Advantage practice. Now, all of these were actually the reasons why from up here, from the top of $600 per share, UNH's stock fell to the low 234, something like that. Now, today, they have a PE ratio of almost 12, 11.77, which is extremely low for a company with UNH scale. And don't forget, we do need UNH, so it's almost too big to fail. Almost. Now, this begs the questions, why, with so many scandals, so many problems of UNH, why Buffett might like it? Now, of course, this does fall into the into the classic move of quality at a discount approach. It is a market leader in healthcare with diversified revenue streams like commercial insurance, Medicare, Medicaid, and Optum's massive health service network. Now, although they do have massive headwinds temporarily, they could normalize, especially medical cost trends, which they could change at the beginning of the next year. Now, strong long-term demand, which is just a tailwind at the US population growth. This will influence UnitedHealth revenue for the long term. Plus, don't forget that Berkshire Hathaway already has historically healthcare plays like DaVita and pharmaceutical stocks, but UNH gives them a blue chip anchor in the sector. So here are the risks that probably Warren Buffett already knows about UnitedHealth, that the ongoing DOJ investigation will not go away. It could lead maybe into fines and even stronger regulation. The elevated Medicare usage trends might not fade. I think they're even going to increase. And the cybersecurity and legal costs could strike around for years. They could stick around for years. Just don't forget that. So what to watch next? Of course, the 13F filing for Q3, which is coming up. Now, does Buffett buy even more or trim or hold even the UNH stock? So this is why you should watch this this 20-day moving trend, 20-day moving average, and of course also watch any news for the DOJ investigation or cybersecurity attack solutions or resolutions. Now, Buffett's billion-dollar bets aren't random. Of course, this is not that major of a bet. And UNH might just be one of those classic buy when there's blood in the streets moments. So here's what I'm doing, what I'm thinking. Of course, nothing in this video is financial advice. I'm not a financial advisor. I'm just a moron on YouTube. So please do your own research. But what I'm currently doing is waiting for this 20-day moving average. Because until now, we had one pop above it. All of the moving averages, this is just technical analysis. This could mean nothing. All of the moving averages are one above one another. So the 20 is the lowest, 50, then the 100 and the 200. The reason why I would see a flip is when the 20 starts increasing. Now, this will not happen tomorrow. Even if we do here a Fibonacci retracement, because this is now falling, we see that it has so much to do from its lows to the 23.6, to the 38, to the 50, to 61, and so far and so on until it reaches its 100% move. So what do I think? I think that this is going to take years and years and years until UNH will come back there at, let's just do here, maybe something like a 45-degree angle. This could take long. So not one, not two, not 3 quarters, maybe a couple of quarters. But what do you think? Let me hear in the comment section below. Smart move or risky play? Drop your thoughts down in the video comment section. With this being said, I'm Robert BM. This is Wealth Down. Catch you next time. Bye-bye.